Here's the Elliott wave forecast for November 15th, 2011. On the Nasdaq 10-day chart, best case scenario is that the move from 2600 to 2685 was a wave 1, and the drop from 2685 to 2650 was a wave 2. It would need to hold at least 2640 and then rally back over 2682 to set up a third wave, which could exceed the 10-day high of 2730. But worst case scenario is that we drop below 2640 and a gap down. And then if we take out 2605 on a gap down tomorrow, it'll set up a C wave to as low as, I believe, 2550. So best case scenario is that we rally above 2682, holding 2640. Worst case scenario is 2640 breaking and then a break of 2605, setting up a C or third wave down. That's the best case, worst case for Nasdaq. It's basically a 50-50 chart right now. If I was 100% bullish or extremely bullish on this chart, I would say this is obviously wave 1, wave 2, but I can't say that's wave 1, wave 2 because we close near the lows. Gotta see what happens tomorrow. If we gap up, then that'd be very bullish. For S&P, best case scenario that the move from 1227 to 1267 is wave 1, and the drop from 1267 to 1247 is wave 2. That would mean it would hold at least 1242 and rally back over 1267 to form a third wave, and then we get out of the sideways garbage in the past 2 weeks. But worst case scenario is we break below 1242, setting up a break below 1227. So support for the downside is 1227 and 1242. Well, 0.786 is around 1237. So if we hold that, that would actually be it actually would also be a wave 2 support level. But worst case again would be if we take out 1242 or 1227 breaks to the downside, setting up a C wave. That could set up a C wave to as low as 1210, 1215 at worst. But the most bullish scenario again is this is wave 1, wave 2, wave 3, which would take out 1267 tomorrow or this week, setting up a third wave up. I was looking at the SPY calls for this week, which would expire on Friday, and I noticed that 126 to 127 is resistance, or 1260 to 1270 would be resistance in the SPY calls, and support would be around right where we closed, 1251 or 125 in the SPY. I'm looking at the SPY again. Yeah, 125 in the SPY is support because there's a lot of SPY puts at 125. So I don't anticipate this market to close below 125 in the SPYs because the amount of puts versus calls is 2 to 1. That's one form of analysis. It's not 100% accurate, but it helps give a little bit fuel for the bullish outlook. For the Dow. The Dow looks like it's in a triangular type of move. This would be A, this would be B, and this would be C. And the Dow rallied the strongest out of the three indices, and it's far away from 0.618, which is around 11,940 or 920, around that area, around 11,925 actually. So if you can hold 11,925 and rally back over 12,275, or actually 12,175, that would set up a third wave. So basically, it looks like all three indices are in possible wave 2s, but the worst case scenario is that this has been a very wild market in the past 3 months, so you can't rule out big gap downs that come out of nowhere. So I'm watching the futures to make sure that they don't gap down really hard. I might actually post an updated video later this evening if the futures start to move dramatically, but they haven't really moved that much. Because if they gap down really hard, then that'll set up a C wave down. That's a wrap.